Okay. Good afternoon, everybody. Thank you for joining us today. We're just waiting for a couple of panelists to join, so thank you in advance for your patience, everyone.
James, can you help to, Mr. T and Tyler is in the attendees list. Can you help to move them?
Sure. Tyler. Okay, all right. Tyler and Mr. Tay, I think, should be joining as panelists in any moment.
Yep, they've joined.
Thank you. Okay. Well, as we've hit 3 o'clock and our panelists are all here and excited like me to get started, perhaps we should get going. Okay. So thank you everybody for joining us. We've had a very warm reception to this invitation, so we're grateful for all of your time today. The title of today's webinar, as you can see, is under the Singapore IP Strategy Series, how to showcase your intangible assets' hidden value to drive growth. So quick introductions from me. My name is James Cheer. I'm an IP strategist with IPOS International, which is a wholly owned subsidiary of the Intellectual Property Office of Singapore. And we have a panel of 4 guests today, who I'd also like to welcome very warmly. Let me move on to the next slide. Perhaps, Pei-Wen, you could help. There we go. So we have 4 panelists with us today, and I'm grateful for all of their time. Starting ladies first, if I may, I'd like to welcome and thank Ms. Ong Le Yu from SGX.
Hello, hi.
Thank you. Quick introductions. I will share a little bit of background on your behalf, Le Yu. Le Yu, you head the technology and new markets team within equity capital markets at SGX. You're very active in reaching out to the startup ecosystem to help innovative growth companies in their fundraising plans. Now, Le Yu has actually enjoyed an earlier stint with SGX in her career, having previously covered the Southeast Asian markets, including Malaysia, Indonesia, and Myanmar, to work with regional businesses interested to list in Singapore, before she left SGX in 2015 to join a fintech startup called CapBridge, which leverages on technology to match professional institutional investors to growth companies seeking funding, which is also regulated by MAS. Subsequent to that, after a role with PwC's Singapore Venture Lab, she then rejoined SGX in her current role in late 2018. So again, welcome to the panel today, Le Yu. Thank you.
Thank you so much, James. And okay, actually, you've done a great introduction. I don't need to carry on more. So maybe I'll talk a bit more about you know, why we are here and why we are so honored to be working with IPOS together on this initiative. The ecosystem is constantly evolving, and as the exchange, as a kind of endpoint for companies to raise money, we must stay ahead of the game as well. And when we first started this conversation at IPOS, and this was actually over a year ago, this was last year, so the memory is still really fresh in my head, we were talking about how we can try to bring new skill sets to companies, and also maybe to help investors better understand new wave of technology companies as well. And that's why we start talking about, you know, intangible assets and how we can help to bring this to the forefront of people's understanding. So we're very happy to be here. You know, we have formed this partnership IPOS has this great program, which I will let you talk about. And we also have a great case study here as well, whom I will let Mr. Tay talk about as well later. But from the exchange, I want to talk about stress, how we are always keen to bring more value to our companies. And this is just one part of it. Thank you.
Thank you very much for that. I'll continue next with Mr. Tay Kiat Seng, who is in fact a leader of a company which is listed on SGX Catalyst earlier this year, and a gentleman with whom I had the pleasure of working with during one of those projects which you mentioned in collaboration between IPOS and SGX Learyu. So a little bit of background for Mr. Tay, who's on the line. He co-founded the water treatment company Memiontech in 1992, and collectively has over 31 years of experience in the water treatment industry. Now, prior to co-founding Memiontech, Mr. Tay actually spent 2 years as a senior manager at a water treatment company, Watermac Engineering Private Limited. And he started his career with an Australian water treatment company called Memtech Limited, where he worked as a design engineer focusing on the Memcore membrane product line for 2 years. So in his current role as executive chairman and CEO of the Memiontech Group, Mr. Tay is responsible for overseeing its overall business performance and direction, as well as formulating, developing, and overseeing the execution of business strategies for growth and expansion. He also drives the group's business growth and is directly responsible for growing the group's foreign subsidiaries in Indonesia and the PRC. And something I learned from our time working together is he also spent some time in Scotland as part of his university studies. So welcome, Mr. Tay, to the panel today. Thank you for your time.
Thank you. Thank you.
Good to see you. Thank you.
Yeah.
Okay, we will be having short opening comments from each of our panelists in a few moments. So I'll continue with the introduction. So next, I'd like to very warmly welcome my good friend, Tyler Capstan, who is Managing Director Asia for Everedge Global. He and I have had the opportunity to work on a number of client engagements over recent months, and a little bit more background on him. Tyler leads Everedge's Intangible Assets Valuation team, which is something he'll be speaking a little bit more about later on. He helps companies to drive revenue and growth by providing intangible asset consulting services around strategy, risk mitigation, valuation, and commercialization. I know that he's helped a wide variety of businesses in this role. Prior to joining Everedge, Tyler actually worked in New York for both Deloitte and Goldman Sachs, where he worked on a number of high-profile transactions, including the Facebook IPO and the Bond Apple offering, no less. Now, Tyler is also a holder of Certified Patent Valuation Analyst and is a chartered valuer and appraiser. He's also a registered management consultant here in Singapore, and in addition to all of that, he also holds an MBA from the University of Utah. So very warm welcome to you today, Tyler. How are you?
Thanks, James. Glad to be here.
Good to see you. Thank you. Now, last but absolutely by no means least, we have Mr. Andy Leck on the line. Andy, welcome to you. I will share a quick background on your behalf, if you don't mind. So,
Not
Andy
at all. Thanks, James.
Thank you. My pleasure. Andy is the principal and head of the intellectual property practice of Baker McKenzie, Wong and Liao in Singapore. He has over 25 years of experience in contentious and non-contentious IP matters, litigation, and arbitration. And he is recognized by very reputable global industry and legal publications as a leader in the IP field. Andy's IP experience covers all aspects of commercial and advisory work, anti-piracy, civil and criminal enforcement, portfolio management, and IP disputes. He also advises on the commercial exploitation of IP rights, particularly in the technology, franchise, pharmaceutical, and media industries. He is an appointed member of the Singapore Copyright Tribunal and is also a mediator with the WIPO Arbitration and Mediation Centre. So again, a very warm welcome and thank you, Andy.
Thanks, James.
Okay. All right, with those introductions completed, a couple of housekeeping items, and then we'll move on to set the scene a little bit more broadly for today's webinar. So we've had the introductions now. I'm going to share a little bit more background on the topic of today's webinar. Then we'll have a 5-minute opening comments from each speaker, after which we'll move on to approximately 40-minute panel discussion, during which we'll be posing a number of questions to our panelists. And at the end of that panel discussion, we'll be taking select questions from the audience. So I ask for your patience, everyone in the audience. By all means, contribute your questions in the Q&A, the chat box below, and we will moderate those towards the end of the panel. Okay. So if we could move on from this slide, let's see. Thank you. I should add that my colleague in IPOS International, Peiwen, is kindly assisting not only with the slides and some of the other aspects of today's webinar, but we'll also be holding 3 short polling questions for the audience during our panel discussion, and there'll be a closing poll for you to participate in as well at the end. So thank you very much, Peiwen, for all of your help. Very briefly, so we can get on with speaking to our esteemed guests, I just want to set the scene a little bit more broadly for our audience members. So this is a slide with lots of different numbers on it, but really what I want to highlight here is why we all know and believe that intangible assets are so important in today's business environment. Let's focus on the basics first of all. I'm sure that within the audience we have a wide and deep knowledge base, but for those of you who may be a little bit unfamiliar with what we mean by intangible assets, let me highlight something. Within the Intellectual Property Office of Singapore, obviously we deal with registered IP rights, registrable rights. So those are things which people often think about when we mention intellectual property. So that's things like patents, trademarks, and registrable designs. But the term intangible assets not only includes those registrable IP, but is also slightly more broader in nature. So it includes things which are non-registrable, things like valuable trade secrets, valuable know-how, things like data, things that you don't register, like copyright, for example. It's actually quite a long list of elements within that set of intangible assets, and something which more broadly people think about, including things like goodwill, which is often recognized during transactions between businesses, corporate transactions. So with that in mind, let's focus a little bit more on what this big set of intangible assets actually represents in terms of importance in the corporate world. A number of studies have highlighted that there is a vast amount of global corporate value held within intangible assets. And if you're looking through the details of these numbers, the first number, 52.1 on the top left, you can see TRN, that's $1 trillion. That's really a very, very large number. $52.1 trillion of global value in intangible assets in 2019. Within the S&P 500, a study back in 2015 highlighted that $17.6 trillion of corporate value existed within intangible assets. Okay, and furthermore, the global trade receipts of IP royalties and licensing fees within 2018 is estimated to be just knocking on the door of $400 billion. This is enormous value. Without wanting to take the steam out of this, let's focus in on Singapore, a more homegrown story. That importance of intangible assets is no less true for businesses in Singapore, operating here not only in the SME space, but also at a higher growth stage, maybe those listed on SGX, also reflect huge amounts of value in intangible assets. So everyone on this panel myself included, are strong believers in and identifiers of the importance of intangible assets. So let's move on to the next slide, please. So while we all appreciate the importance of intangible assets and the value that they contain, quite simply, there is a gap out there. And there is a gap between, one can describe it as the book value of businesses and the market value of businesses. And ultimately, this gets down to how valuable intangible assets are or are not reflected on financial statements. Now, the example we use here is a commonly cited one, is Google. Everybody knows Google, incredibly valuable business. The date we put this slide together a few days ago, market cap of around 990 billion US dollars, but on the latest financial statements, they returned only less than 3 billion US dollars in intangible assets on the balance sheet. So there is a big gap there. Now, what we'd like to highlight and what we're going to drive towards in our conversation today is that the reason that this gap exists is because partly there is a limit on what type of intangible assets must be recognized on financial statements. At the moment, only a subset of intangible assets must be recognized on financial statements. But that doesn't mean that those assets are not contributing to value, and it means that they're still contributing to growth of the business. So what we're looking at today is how businesses can address this gap in their own words. How can you perhaps voluntarily choose to make disclosures either through financial statements to your investors or through other communications about what intangible assets you have? How can you better measure and therefore manage those intangible assets within your business? And how can better measurement, management, communication of those assets lead potentially to improved valuation for your business? Okay. With that being said, my parting comments on this before we join our speakers is that at IPOS and actually through the whole of government here in Singapore, we have a very clear focus and strong commitment to deriving future economic growth for Singapore through the use of intangible assets and IP. And in fact, IPOS is working with a number of other government agencies to develop something called the Singapore IP strategy, okay, which is envisioned to be a roadmap to help guide Singapore's further development as a global IP hub over the next decade. Very long-term view. And in fact, on the back of that, over the next few months, my colleagues and I will be reaching out and engaging a number of different stakeholders in the industry to help co-create and send feedback on possible strategies and plans within that overall long-term strategy. So there's a lot of work going on behind the scenes to try and address the issues which we're focusing on today. Okay, so with that being said, I say thank you very much for your time listening in on that context. And if I may, I'd now like to invite each of our speakers to share for about 5 minutes or so on some specific topics. So we will begin with Le Yu, if you don't mind. And Le Yu, I'd like to invite you to share a little bit more on what disclosure is in general and how IA disclosure can help companies raise capital on the capital markets. Thank you.
So, so 5 minutes is really short, but if I try to answer this from a broad level perspective, I think there are two ways of looking at it. There's one way is from a regulatory perspective, and the other way is from a market perspective. From the exchange, as with other exchanges from developed financial centers, we follow IFRS, which is a internationally recognized financial accounting standards. And therefore, as of today, IAs are not recognized. Internal IA is not recognized within IFRS, only external IA. If you acquire a company and there's M&A done, and then you can kind of clock that as a goodwill or something. So because of the way we follow IFRS, which is the International Accounting Standards, there is no hard requirement, therefore, for IA to be reported as well when a company is looking to list. Now, by having said that, does this help the company when it's trying to build its profile, or when it's trying to attract more investors and make itself stand out from the crowd? Then the answer would be yes, of course it is. And especially in a day today where I think information is very global and cross-border, and it is it's probably very competitive between different companies with similar business models or seemingly similar technology skill sets to show how they're different. And that is where this disclosure comes in. If you look at prospectuses of companies that are applying to list, they do tend to include market reports, industry reports, and this is something that companies can definitely include as well. And this was actually something along the lines of what we were thinking about when we first started this engagement with IPOS. So, do we need to make this a hard rule? I think that is something that we can always discuss for future. But as of today, definitely we hope to see more companies embrace IA reporting and also, be open and share this with their investors, their shareholders, to let them know the kind of value that they're bringing to the company. Thanks, James.
Thank you very much. Incredibly concise and articulate comments on a very broad and wide-ranging topic.
Hope I made 5 minutes.
You absolutely did. That's been fantastic. Thank you. I think, okay, with that done, I'd like to move on, if I may, to Mr. Tay over at Memiontech.
Yes.
Hello, sir. How are you?
Hello. Yes. Good. Thank you. Yeah.
Thank you, Mr. Tay. I'd like to invite you specifically with reference to the project which we worked on together, which included an intangible asset audit, stock take for Memiontech in the build-up to your IPO. Could you share with us your perspective on how Memiontech benefited from that intangible asset stock take, the audit, and disclosure that you made during your recent IPO? Thank you.
Yes. Basically, this IA, intangible asset, is quite new to me, but I'm the guy that like new thing. I know the IA actually is very new. When I have an opportunity to get to IPOS, I think only one meeting section, I already signed the award or PO letter to them for this IA services. So throughout this audit process for our company, I learned something that I don't know. Then now I know. For example, we have very good partnership and network with Indonesia. We call Chapro, and that is the asset of the IA. So these groups, IPOs, do the audit and identify that. And then today we do the implementation. In fact, a few more projects that state-owned company, because with the partner that with us as a joint venture, other state-owned also similar size of project contact us also. I think that is a good, very good size. And in fact, that is very valuable. Last time we don't know how to package it in that sense. Yeah. So this is a good benefit. Another one is throughout their audit process, there's another point, which is the black box about the data. In fact, we have a lot of data, but we don't know how to treat it as an intangible asset and how to optimize the data to value or to enhance our performance of operation, maintenance, for optimization, for cost savings, where other competitors may not be able to do it, but we throughout through many years of experience, and the operation data, we can capture it and make it a black box in such a way that it fully control on us. Those are very good points that I learned and they implement to our team. I think more result will come. I will say thank you very much. Yes, we are still learning very new thing. Yeah, I like new thing. Yeah, thank you very much.
Thank you so much, Mr. Tay. You're a
Yes.
humble man. Thank you.
Yes.
It was a very interesting time when we came to work with you, because obviously your entire team were incredibly busy in the build-up to the
Yes, yes.
IPO. And
Yes,
I'm
yes.
glad that you found such value in the stock take which we conducted together. Thank you for
Yes,
that.
indeed. Yes. Thank you.
Okay. Well, our next introductory comments will come from Mr. Tyler Capstan over at Everedge Global. Hello, Tyler. Something which we'd like to focus in on a little bit in these comments, given Tyler's vast experience in things like IA valuation, is we'd like to ask you, Tyler, to share some of your local or overseas experiences on how intangible assets disclosure have benefited companies in your experience.
Thanks, James.
Especially when it comes to valuation.
Great, thanks. Yeah, you're definitely right. And the introductory comments that you provided, you've seen a lot of studies around the importance of intangible assets and how they're growing in corporates today, and the value of these. This is a graph that shows basically over the past 40 years, a snapshot of S&P 500, a value that sits in intangible versus tangible assets. And it's almost completely inverse after about 40 years. And those assets, that we look at in valuing range from everything from data to brand to content, and these are becoming more and more important with businesses today. And even with this going on, most companies will spend a lot of time tracking chairs and laptops and have a fixed asset register. And because of those accounting principles that force us to look at things mostly on cost, we do miss a lot of the value where assets are being built and driven from companies that are spending money on R&D or spending money on generating good ideas and good intellectual property. And as we think about valuations and the traditional ways that valuations are done, corporates and typically you would look at how much cash flow can this business generate, okay? And that's how they come up with what it's worth effectively, right? And so you look at the earnings, and in this case, it might be a multiple on earnings or a multiple on revenue, depending on the type of business, or take a look at the fixed assets in cash and then look at the cash flows on top of that. So one of the reasons for the intangible asset disclosures is because intangible assets are a strategic lever that can definitely help move the overall value of a company by helping to tell the story of why those cash flows are supported, why they're important, and potentially some of the strategic value that's potentially missed. So just two quick case studies as you requested, James. This was a company that we worked with that was selling their business after 30 years. And a traditional investment bank came in and said, look, you're probably worth about 4 times earnings. And we looked at their balance sheet and we said, well, one of the biggest assets they had over 30 years was the data. And it wasn't actually, on their balance sheet. They had always just expensed it. And so we said, well, what if we actually look at valuing this and find a particular buyer for the data itself? We ended up selling that data set to an insurance company for 32 times earnings, all right? Significant asset, under-recognized, and had a proper review of the intangibles been done, and then a disclosure been made. This company wasn't listed, but this is a typical case where companies will a lot of times have missing assets that are not fully recognized. And then this second one is a company where we're raising capital. And had they not identified the intangible asset, they probably wouldn't have been able to raise capital. So this was a data center company called AirTrunk, and the CEO had a disruptive technology, and he came and said, I need a significant amount of capital to be able to go to market with this idea. We said, well, let's look at your idea. How do we protect it? We looked at patent options, and that wasn't the right route. We looked at trademark and trade secret combination, and that was more applicable to what he needed to do. We put together an intangible asset strategy for him. We then did a valuation on the technology, valuation of his company, and we then took that to investors. And JP Morgan picked up the raise. They ran it, and they were able to raise over $400 million over the course of the 3 or 4 years, over a few rounds. They had a debt facility with Goldman Sachs of $750 million in debt, in which in February this year, they just sold to Macquarie Bank for over 3 trillion Australian dollars. So, excuse me, 3 billion Australian dollars. And so the reason why we use these 2 case studies is because helping to identify those intangible assets that are in your business, and then being able to articulate the value of that, tell the story to investors, is one of the ways you can actually start to unlock those assets and make them available for people to see. So I think that's, the importance of this discussion today. And, we've done over 1,000 engagements, and this is just a couple of the case studies that are applicable from customers we work with here in Singapore with IPOS jointly over the past few years. And so definitely very, very relevant for SGX, and helping to see how companies can really unlock that value that's hidden on those balance sheets. And I look forward to the discussion later. So please get your questions ready, because I'd be happy to answer them.
Thanks so much, Tyler. That's a call for tricky questions for Tyler, if ever I've heard one. Okay, thank you very much for sharing that. Now, Andy, I'd like to invite you to share a little bit. Thank you for your patience. Specifically, if you could share a little on some of your own experiences on how you've seen IA disclosure benefit companies in their IP management and the commercialization journeys that they've been on. That would be great. Thank you.
Thanks, James. Thanks for the very kind introduction. I just hope to give a very quick introduction of my firm. So I'm with Baker & McKenzie, and we have 77 offices in 46 countries. We're a law firm, a very large footprint in Asia, with offices in 7 out of the 10 ASEAN countries, and with Asia Pacific territories like China, Taiwan, Hong Kong, Korea, Australia, and Japan covered. So we are a full service law firm with practice areas including capital markets, banking and finance, mergers and acquisition, tax, and of course, IP technology. In addressing your question, James, on the experiences that I've come across and how IA disclosure had benefited company, as a law firm, I don't contribute in the same way that Tyler does in the commercialization journey. But from my role as a lawyer, where IA disclosure and valuation had been very important, would firstly be in situations where you intend to license your intellectual property or your intangible asset, or you're running a franchising business and you are, let's say, utilizing certain trade secrets, which drives the model for franchising. In those instances, a valuation of your IA will let you calculate a more credible licensing fee and royalties, and they will certainly assist you in terms of your bargaining leverage. The second area, in our lawyering services, where we've seen the IA disclosure and valuation being of benefit, is in the calculation of damages in the event that infringement of your intellectual property takes place. Quite frequently, this is left after the commencement of a suit, and you find that you are scrambling to appoint audit firms or folks like Tyler, the consultants, who will assist us in preparing the valuation. And sometimes it's made even more difficult because the company may not be operating in that model. So very recently, we assisted a cosmetics company that had decided to terminate its distributor in Myanmar. And the company, despite the termination, continued to use our clients' trademarks in that jurisdiction. But the problem was our clients was only in the business with this distributor in a principal distributorship contractual arrangement. There was no licensing fees to speak of. Now, had a valuation been done of the intellectual property assets, or in the case that I've cited in the trademarks, it would have made the calculation of the damages a lot simpler. And you will be doing this on a year-by-year basis, hopefully, as you are going through your audit or your accounting process. And so those numbers, are always refreshed on an annual basis. So these are just two very short experiences that I've encountered. Thank you.
Thank you very much, Andy. I'm sure that we'll be getting into a few more details during our panel discussion, which is coming up now. So thank you all for those opening remarks. We've allocated about 40 minutes to this panel discussion and questions from the audience. So we have 5 questions coming in at the moment, so do keep posting them, and we shall review and get to those at the end of this panel. So with no further ado, I will kick things off. I'm going to direct a few of these questions to individual panelists, but by all means, if there are burning comments or insightful views which other panelists would like to share, please do chime in, all of you. But first of all, Mr. Tay, I'd like to address, I'd like to address the first question back to you, if I may. So you've been very kind in sharing your initial experiences of that IA audit and sort of disclosure, which was put together for your business recently. But in a longer term sense, how would you say that a better appreciation and understanding of the intangible assets within Memiontech has helped you and your executive team enhance the business strategy for Memiontech going forward?
After the internal, they do the IA, Intangible Assets Audit reports, we have identified, they help us to identify the point. Especially just now I highlight that there's one data that the black box. And that one is very critical because we have 2 BOT projects that we serve for 25 years. We do the EPC, we do the operation maintenance for throughout 25 years, and we sell the water in Indonesia, Jakarta. So this is the data that earlier I shared. That one can be optimized our performance in terms of drive down the operation cost, electrical, chemicals, consumption, and control the parameters of instrumentation. Even using our iPhone, we can control our existing plants. All this intelligent data console together as a black box that we are in control. Before we get to know this IA, we just let the operators, hanging there and running. Now we know how to console this data, and we are in control on this. We know now is a value asset. So with this one, with more plan to come, we can differentiate that our competitor don't have this data, the black box, and we can optimize, and our per meter cube of efficiency and productivity will be different with people. And people don't know why we're able to achieve the kind of operation cost. For example, many competitors, they don't understand how come we manage to research the technology we provide with this, our water treatment plant. We can drive with this per meter cube, this kind of cost. People don't understand because we know the data that we are optimizing and put in the black box. So this is going to be very important. And then we just initial phase because now we only 2 plants, and we're going to further, we are continue doing it. We could further enhance these data and our assets. Second point, earlier share also we managed to joint venture in consortium with especially Indonesia. Now people start contacting us with similar size of project. They contact us because we leverage the branding with our partner. Our partner in Indonesia, like Capro, I think Indonesia, if you are Indonesia, you know Capro is Jakarta Popolindo. We managed to partner with them. When we leverage who is Capro, Indonesian company, they know them. So indirectly, our brand also leverage out. So as of today, I can see that many inquiry coming up because the state-owned especially, they want to join us. They say that even you are a Singapore company, if you can partner with this big company, they feel safe and they know, we are there. So I think this is an advantage. So we implement, still early stage because we just start about 6 months or yeah, get to know about 6 months. So we have a long way to go to continue grow. Yeah, this is the critical point, 2 point that we learn. Of course, there's some other point like we have a license. We have the license that ME11 L6 in Singapore as a PUB unlimited. This itself is an assets, intangible asset. We also Indonesia because as in UJK, P1, B2 are not unlimited license. So we can do the tenders that people cannot, In Indonesia, handy you can have this license for constructions with a the higher level. Those are the, yeah.
I remember a lot of those details, Mr. Tay, and thank you for sharing that. One of the comments which you shared with our team, and I remember the meeting, was that in your experience, one thing you said to us was actually when we started describing what these intangible assets are in our definition and how they fit into driving your business, a lot of the issues that we raise, you and your team would be thinking about from an operational management of the business point of view for many years, but you perhaps hadn't used that sort of lens, so to speak, of intangible assets to help drive further insights, which you've shared. I think those are really good examples, like the data capture, and it ties in very well with the case studies which Tyler shared earlier on. So thank you for that. And I guess one follow-up part is, now that you've had this this sort of introduction, first 6 months crash course, as it were, into intangible assets and how beneficial they can be. I know in your latest financial statements you started referring to this work and managing intangible assets in future. Is that something that you plan to do on an ongoing basis to help tell that story to your investors?
Yes, in fact, we have put our annual report about my statement, CEO and Chairman statement in my annual report. We put some critical IA factors there in my annual reports. And also during the IPO investments, so-called invite for investor to join to buy our share in the initial phase. We have share some of the intangible assets to our potential investor. Yes, those are under IPO process that I think they are contribute. Yes, many investor before they buy our share, they are asking what's different with other people's. We tell them that one of the big difference is in Indonesia, we are overseas as a Singapore company, overseas platform, and we have overseas this partner, and we have this intangible asset. That's the difference. It's not easy that water treatment company at this moment, as far as I know, Singapore company, there's no go to Indonesia so many years, like 20 odd years like us. Yeah, thank you. Yes,
thanks, Mr. Tay. Yeah, it's definitely an ongoing success story, and we're all wishing you and the team well.
Thank you.
I think on that note, to keep things rolling along, we actually have a poll, a quick question for the audience, which I'd now invite my colleague Peiwen to share, if you can, Peiwen. Let's see if I can. I think I can launch this one, actually. Okay, so polling, question 1. I'm going to launch polling now. I will allow panelists to vote, though I think I can guess their answers. We'll give you a few seconds here to share whether you think disclosure or communication of your company's intangible assets or IP could benefit your company in particular. I can see the buttons are being pressed feverishly well. That's good. Give you another 5 seconds or so. 3, 2, 1. Going once, going twice, going 3 times. We'll end polling there. Okay, let's share those results. I do like this functionality. There you go. I mean, we have a pretty overwhelming yes, which is good for us to see. I think that certainly drives the focus of our conversation so far. But naturally, there are a subset of you out there who feel that it maybe isn't the right thing for you. And perhaps we can touch upon some circumstances where businesses might be reluctant to disclose maybe too much information. And for those of you who, I guess, would like to find out more. So let's move on from there. Thank you for your contributions, everybody. Okay. So back to the panelists. Le Yu, I'd like to ask you a question next, if I may. More specifically focused to disclosures in relation to equity capital markets, okay? So I think for keen-eyed observers out there, we will have identified a number of different trends in disclosures being made in relation to equity capital markets recently. And ESG disclosures have gained particular importance over recent years. So in your experience, in your view, how do you think we should expect this sort of changing environment to impact the field of IA disclosures?
I see it as a little bit organic. We started our own internal team to encourage ESG many years ago. And it took some time to actually build it into, a code. And now it's actually it's within our code of corporate governance, which means that it is not compulsory, but it's advocated. And we started including more guidelines on, sustainability, encouraging companies to talk about how they are, basically employing good corporate practices overall. So when we talk about IA, I think the discussion is how to include that as a journey, right? And I think the most important thing is to be able to demonstrate that this brings true value to investors. Like we look at Minion Tech, and when we suggested this company, right, it's because we know that Mr. Tay and his people are employing a good technology. They have good business model. They have a good trade secret. But maybe investors don't really understand that. They just look at the company and they see a plant, right? And that's kind of all they figure out. So the question is, how do we go from just seeing something that's very tangible, that's a plant or a factory or property, and Singaporeans love property, right? In general, all Asians seem to love property, and how do we move past that to something that's much more intangible? I would say that my hope one day is that maybe we can include IA into part of the code. So that's something that we can advocate people to adopt and show that there are certain guidelines to follow. But how do we do that? Then we must bring that value back to investors. And I think Tyler brought up some great examples just now of how IA actually shows the company generates far more value than what we see at the outset. Now, how do we get there? That's something that we have to work on. So from the exchange, something like this, I think matters. And I was very pleasantly surprised to see such a great turnout. We need to keep generating content. We need to keep featuring, good undersold companies. And we need to keep getting their message across to investors.
Thank you very much for that. I think one simple observation, which might seem facile, but I think it's important, is that for IA disclosures in the field of financial statements, sometimes the story behind the IA that you want to disclose is quite difficult to communicate through one number, and I think that's partly what you're describing here, isn't it? And I believe it was true for Mr. Tay and Minion Tech, and no doubt for a lot of businesses which Tyler works with too. When you combine this whole set of intangible assets under the roof of a business, the way that they interact and operate can become quite a complicated story, you know, and it's sometimes a matter of fitting kind of square peg into a round hole at the moment, of telling that story, articulating it clearly to all of your stakeholders with the tools at your disposal to make, you know, regulatory announcements or broader communications to those stakeholders. It's a difficult balancing act, and it's clearly it's an area which is being worked on very actively. Thank you so much for that.
Yeah.
Thank you. Okay, I've actually got a bit of a sort of cheeky question here, which is also going to be directed to you, Leo, which is something we did discuss before this, but it's quite broad and talks about transparency. And I'd like you to comment briefly, if you can, on how you think greater transparency can help equity markets more broadly, you know. And I think this ties into what we just said about the story, you know. Thank you.
Transparency is always important. The more transparency there is, I believe the more liquidity it brings to the market. But I do want to be careful here, because I think that's the problem that we face with IA reporting. It's not always fully well understood by people, and especially I would say retail investors. It can be very technical. It can be very complex, and I think that's the struggle that maybe from a platform perspective that we always have to balance, right? How do we have a lot of information versus overloading people with information, and these people who are assessing it at different levels. There could be people like yourself who are very well versed and understand this well, but there are also people who just want to know that this is a good company, and I get what it's trying to do, and I don't want to understand too much about valuing, you know, different kinds of business models, etc. So I think that if we want to get to a point where we recognize IA, we also have to strike that balance. You know, because I don't think everyone gets it, and it can get too technical, but we cannot not embrace it, because that's the way the world is going. You know, if you look at the way the government is pushing our smart nation, you know, industry 4.0, these are the companies that will be the dominant ones of the future. You know, it's not going to be the traditional kind of assets, traditional kind of industries anymore. So just because it's difficult doesn't mean that we should not embrace it. We must try to find that balance. I mean, I don't have an answer for you. It's not easy, but we have to get there.
Thank you so much for that. I think that hits the nail on the head. It's an ongoing balancing act, isn't it? And it's always about balancing the needs of, from your point of view, that whole range of investors with a wide spectrum of understanding, maybe, or experience in the markets. But it's a subject which a lot of us are working on. Thank you for that. We actually have our second poll question coming up. So again, I'd like to invite our audience members to prepare their fingers over their voting buttons as we move on to question 2. Okay, I'm launching the poll. Now, the second question is, do you think the disclosure or reporting of IA and IP can be improved? Okay, there's a lot of votes coming in. 5 more seconds, I think. This is pretty overwhelming. 3, 2, 1, going several times. Let's call that done. End polling. Share results. Okay, boom. 79% of you think that there's room for improvement. So that certainly dovetails pretty well with what's been said so far. And I think I'm glad that there's a little bit of a variety in opinion. There is someone saying, 2 people saying no. So I'm glad that there's a variety of opinions there. Perhaps we could hear from them later on. And maybe, I guess, people working out how those improvements could be made. But certainly a pretty overwhelming response there. So thank you, everybody, for participating in that. Okay, let's see. So next up on the panel, Andy, if I may, I'm going to come to you. Thank you again. I'm going to ask you this question, if I may. Why should companies go through an intangible asset audit, otherwise known as a stock take? And why should they improve intangible asset disclosure, in your view? Thank you.
Thanks, James. I think given time constraints, I will just offer 3 reasons why companies should go through an IA audit and to improve in its disclosure. And for my presentation, I'm going to use the terms intangible assets and IP interchangeably. I think the auditors amongst us are more familiar with referring to such assets as intangible assets, and lawyers by training will refer to them as intellectual property. Now, although I have these 3 reasons, I just want to highlight that underpinning any IA audit and disclosure are really two needs. The first is a need to understand what IA a company possesses. And the second is a need to appreciate the levers which the IAs will bring and how best to exploit them. And in the past 7 years since the Singapore government announced the IP Hub Master Plan, more businesses, I believe, understand today what IA or IP means. Historically, corporate assets have always been disclosed in audits, but for the longest time, business owners and auditors had challenges recognizing as well as measuring these assets without physical substance. The second thing is that, with the International Accounting Standards 38, there's now more guidance setting out criteria for recognizing and measuring IAs. So, what are the 3 reasons? First, I think the traditional reason for audits is to account to the shareholders the value of the business and its assets. So the same reason to me applies for intangible assets and its audit. And as Le Yu had hinted just now, as time progresses, more companies are digitizing, more services are going online. Data and content has now become king with the advent of artificial intelligence. And there's a gradual shift in recognizing the importance of IA. Take Louis Vuitton, for example, a company which had its roots in the consumer goods and retail industry. Now, building on its brand equity, it could diversify into the hospitality industry by starting up, its new chain of hotels. In fact, it recently even diversified into healthcare by making hand sanitizers and face masks during COVID-19. So this would not have been possible without Louis Vuitton recognizing the value of its own brand equity and goodwill. So it's important to firstly recognize the IA like any corporate asset which lends value to the company, and try your best to put an accurate value to that asset. Second, from an internal perspective, once the IA audit helps management and shareholders better understand previously unrealized assets, this will in turn guide the company to take the appropriate steps to register, protect their IAs. It forces the company to devote time and resource in making business and systems improvement to cater to such IAs. It helps the companies to better plan and budget expenses, because some of these expenses to register and to protect IAs are not insignificant. They're quite hefty. And if the companies do not make the effort to plan, budget, and to make the systems improvements to register or protect their IAs, competitors or even former employees may steal their IAs and ultimately undermine their business viability. So let's say your company develops a new app for contract tracing using technology which is not deployed globally presently. And if the company fails to recognize this asset, and fails to take steps to protect it either as a trade secret or a patent, a former employee can appropriate the source codes of the program, register it for himself, and even stop your company from using the app, even though your company innovated it. So the audit will help to focus the company to better plan and budget its business. The final reason from an external perspective is that such assets can be a source of unrealized funding and present business opportunities, both of which have been touched on by Tyler and Capstan. So for startups, a credible valuation to the IA can attract investors from private equity, VCs, or for that matter, even from other MNCs, as Capstan had mentioned. For established companies, a credible valuation may help as collaterals to be used for further fundraising with financial institutions. Now, take Wirecard, for instance, the German tech company where the CEO has been alleged to have defrauded the company of some 22 billion US dollars. The company is now in liquidation. The company is on the cusp of survival as business partners left, right, and center are terminating their contracts. But the underlying tech of the company, the e-payment system, is real. It carries value even during these troubled times. So in such situations, I think an audit and a proper disclosure will help the companies improve its bargaining leverage. Those are my 3 reasons.
Thank you so much, and it's a very insightful commentary, and I think that dovetails nicely with some of the comments which I imagine Tyler will be sharing next, and very topical examples which you share there. Thank you. With specific reference, Tyler, to the question I'm going to follow on with you, if I may. I've posed it in this way: can intangible asset disclosure help to increase valuation of a company? And it's interesting that Andy has shared that example with us just a moment ago. So I don't know if you could speak to that particular circumstance as well. It's an interesting one, isn't it?
Yeah, I mean, valuation is a very interesting thing in that it is worth to whatever the buyer is willing to pay for it. If you have your intangible assets locked up in your company and you don't have a good story, if you can't even tell investors or people in the market what you have, what you're doing, and why it's valuable, they will not pay for it. So an IA disclosure is one of the first tools that you can use to help to outline to the market what you have and why it is valuable, and then let them decide. So does it change your valuation? It can, definitely. If it is done properly and written well, I think it would, absolutely. The majority of market value is driven off of news and interest and hype sometimes, as we see in the markets today, don't necessarily correlate with traditional quantitative measurements and historical valuations. So the answer to that would be most indefinitely yes, if it's done properly.
Thanks, Tyler. I think that's a really fascinating point, which is markets have survived for a very long time operating in the way that they see fit, right? With people digesting a wide variety of information out there and making views, informed or otherwise. But when you go out and speak to your own clients, how confident or worried are your prospects or clients that those market participants just won't really understand things unless they spell out to, say, valuers and then the story on a prospectus, if they're at that stage, exactly what's going on in the business?
Well, there's always the balance. You need to balance, disclosure and protection of your confidential information, and what you're doing inside a firm needs to be protected. But if you are keeping it all to yourself and not sharing it, then there is absolutely no way that they can know what's going on. So in terms of confidence, the majority of clients that we deal with don't necessarily even have a full understanding themselves of what their intangible assets are. They don't really understand what are the assets that actually underpin their cash flows. They might say, well, we have a great product, And I say, okay, well, what makes it great? And they say, well, we got these cool colors that no one else has. Okay, well, how did you get those colors? And they go, well, we have certain distributors. Okay, do your competitors have those same distributors? And they go, no. Okay, so your competitive advantage, as you're saying, is actually your access to distributors. It isn't actually your colors, because those ultimately are just the representation of your intangible asset. You have to go back to what actually is unique and different about a business, so that then you can pin it to actual cash flows, and then you can actually drive the valuation to say your valuation is X because your cash flows support it, and the cash flows are supported by your intangible assets or your fixed assets, depending on what they are. And those are defended by either legal mechanisms through my IP lawyer or through an intangible asset trade secret strategy internally, or moats or barriers to entry, or however you're protecting that. And that gives investors confidence. Now, value is a very interesting thing, because when you look at markets, you can either increase revenues or you can decrease risk, right? If you can help decrease risk on companies, you inherently will also help to raise the stock prices. So on either side of that lever, if you can pull one of those, you're better off.
Thank you, Tyler. I think it's interesting. It makes me think of establishing, say, a chain of title over ownership of new inventions. You really have to lift every rock. You have to make sure you understand every stage in a process. And Andy, perhaps I could briefly ask you a quick follow-up question on that, because I know your expertise is also in the area of franchising, and you mentioned in your opening comments, I think, how trade secrets underpin a lot of that business model. So in your own professional experience, do you find that you face a similar scenario where businesses might have a strong sense of precisely what they have and what they want to take out to other markets in a franchising model, but maybe they need to think a little bit more granularly about precisely which pieces of the puzzle fit together in that way that Tyler's described?
Sorry, I was on mute. Yeah, absolutely. And the example that Tyler had provided on the color scheme as against the distribution channels available to the company is a case on point. But I think that the area, the one thing that focuses the company's attention to think in that granular way that you suggested, James, is as a starting point to truly understand what the intangible asset is. And I think, this is something which many companies fail to see, the wood for the trees, because they are just so focused on the underlying business that they fail to pay adequate attention to the gem that's really in their hands, and then how to appropriately place a value, protect, and exploit that IA or intellectual property.
Thank you very much. Okay, we've got about just under 10 minutes left, so we have to be a little bit mindful of time, but thank you all very much for those insightful comments. I think that in combination with, there's a lot of material there and food for thought for our audience members, and I personally feel it's been a good indication of how important consideration of intangible assets, their disclosure, and certainly how they contribute to value as part of the business story for a lot of corporations out there. To keep things moving, we've got a quick final active poll, which I'd like to share, if I may, which is to just round up our panel before we maybe take one question. I think we've got time. I will share this quickly with everybody. Third and final question. Do you think better disclosure or reporting of IA/IP will support transactions? So when we say transactions here, we're looking more broadly at kind of M&A transactions out there. Okay, we'll keep this brief in the interests of time. 5, 4, 3, 2, 1. There you go. We've got over 100 participants have contributed? Boom. Okay. A resounding yes. I'm glad to see that, because I think that it supports the fact that everything we've been talking about today is maybe hitting home with our audience members. So again, thanks to the audience for those pretty comprehensive results. At this stage, I would actually like to take maybe just one question. I'd share with everybody that we've received over 20 questions from the audience. So that also is an indication of how interested and engaged with the subject matter people are out there. Let's see. Okay, we're just going to have time for one, I think, but we can definitely maybe follow up with some of these offline afterwards. Let me pose this one broadly, and we'll see who'd like to take it. It's actually posted by Anonymous, so I'm not sure who it is to say thank you. But here's the question. IA valuation is easy when there is a direct income associated with the IA or IP. What about those that cannot be directly associated with any income? The hidden gems, so to speak, that have yet to realize their potential. Who would like to have a go at that one? Otherwise, I'll nominate. Tyler, would you like to have a go?
Happy to, James. IA valuation, my bread and butter.
Well played.
Yeah, so kind of like the answer that I gave to the other question, in that intangible assets may not have a direct revenue associated with it. And typically, I've seen it, one of the other questions, I'm going to kind of half answer that other one as well while I do this, right? And so traditionally, you look at income methods, cost methods, and market methods when you do a traditional valuation. Okay, so you can articulate value to a particular technology or a particular intangible asset if you are attributing cost to it and you are capitalizing your spend onto that. That's one way to try and start putting some of those assets onto your balance sheet. Okay, that is accepted under GAAP and IFRS. Okay, so if you know, that is one way to put those onto the balance sheet. And if there are not direct cash flows associated with the intangible asset, you might need to look down one layer. All right, and that again is if the actual intangible asset might be your trademark, for example. You say, well, my trademark isn't necessarily generating me any money. Okay, it's me selling in this particular market. You have to say, is that trademark doing any lift? Are you getting a brand uplift versus your competitors? Okay, are you getting a premium on that? And you can do other methods, such as like a relief from royalty method, to actually try and slice up what revenues are actually being driven from what assets in your business. And so you can take a traditional discounted cash flow method that looks at all your cash flows and then puts them all into the company. But then you can also do an intangible asset buildup, which slices your company into its components. And an audit is a first way to identify what buckets should be in that. So hopefully that's helpful in understanding how you can actually start to slice out those intangibles and attribute some portions of those revenue streams to them.
Thanks so much, Tyler. Yeah, I think that's great sharing. And I think the fact that that question's come up, I think it might have been asked or shared by a number of people in different forms, is that people are really trying to work out, well, precisely how could we make this work for us, you know?
Yeah, and sorry, just to add on to that as
Sure.
well, James, having it work with everybody in different ways, there are different times you use different methods for different types of companies. Or different methodologies at different times. So, knowing when to use those, how to apply them, just ask the right people and you can get them done. So.
Thank you. Okay, we've hit 4:13, which gives us a couple of minutes, I'm afraid, everyone, to wrap up. I know we could stay here chatting for longer, and I know I, for one, would love to. But I'd like to take this opportunity to thank certainly all of our panelists, Ong Le Yu, Andy Leck, Mr. Tyler Capstan, Mr. Tay Kiet Singh, for your time today and your expertise. We really appreciate it. Also, for the audience members, thank you all for your time. I have a few sharings to do of my own just as we wrap up. So I've got a couple of slides which will be coming up. Thank you so much, Pei-Wen. First of all, shameless plug, but very proud plug, I have to say, that coming up in this series of Singapore IP strategy sharings is another webinar later on in August, towards the end of August, during our headline event for the year, which is IP Week. Obviously, with current circumstances, the IP Week put together by IPOS and different partners is going to be happening digitally. So we have a number of events and webinars going on, one of which will be more focused on IA valuation. So I think a lot of the participants from today would probably be keen to come along to that. So by all means, go along to the ipweek.sg website to register for that. We have a number of articles on this subject also coming out in line and in support of that timeline. So everyone on an email list for this event will also receive those in the forthcoming days. So the only closing remarks are we have a final poll to share with you before you leave. And as you consider that poll and your responses, if there's anything which hasn't been addressed, which you'd like any of us, honestly, not just myself, to maybe pick up upon, but certainly if there's any interest in IA audits or the work that we do through IPOS International, please, I invite all members of the audience to drop me an email. I will do my very best to respond to you all, and I look forward to continuing the conversation there. So, with that being said, I think we have one final poll to complete and say thank you. There, okay, I'm going to launch the final poll, and then I share my warm, heartfelt thanks with all the panelists. Thank you so much. Okay, thank you for your time, everybody, and Pei-Wen, over to you. Great, I can see we've got a lot of contributions to our closing poll. Thank you, everybody, for contributing to that. All right, we'll be leaving the session open for a short while so that everyone who'd like to contribute to the closing poll has an opportunity to do so, which obviously includes our panelists, I believe. But panelists, I know you have busy schedules. If you need to take your leave at this stage, I'd say thank you very much indeed once again. And we look forward to continuing the conversation in future.
Thank you, James. Thank you, everyone, for attending. Appreciate the time. Have a great weekend.
James. Thank you.
Thank you,
Bye-bye.
everyone.
Thank you. Thank you. Yeah.
Thank you.